All right, so today is Monday, August 29th. We're getting close to the end of the trading month. We've had an interesting go of it since June 27th, June 28th, sorry, the last low that we experienced in the market being defined as NASDAQ 100, S&P 500, and a Russell 2000. That's how we define the market. The last low was June 27th, and since then we've had a pretty strong run to the upside. The closer we got to our long-term area of resistance, the more we discussed the increasing likelihood that we were going to see some sort of stall, some sort of possible reversal. And what we saw is that NDX in particular moved up to that almost nearly sideways area of resistance twice and stalled out there. And you can see here, once was on the 15th of August and the second stall was on the 23rd. Now, the trading range between the 15th and the 23rd was pretty much flat. You can see just by looking at the daily bars how tight that range was for NDX. Not much activity in here. Probably some trade opportunities. I know Michael was taking some trades in that time period, but it's definitely not been as active as what we have typically been used to in the live trading room. And even prior to the 15th of August, you can see how we'd moved up and pretty much stalled out into a flat trading range here since about the 5th of August. So by my view, we've clearly been in a pretty flat range for nearly a month. And what we're looking for is clues that tell us that perhaps we've stalled now on this rising cycle that started back on the 28th of June, and that perhaps we may be starting to see signs of the next declining cycle. The only fact I can ever identify in trading that is, in my opinion, 100% guaranteed to occur is that after the completion of a rising cycle, there will be a declining cycle. So the market trends higher in this rising cycle. The market will trend lower in a declining cycle. There are two things we don't know about those cycles is, number one, how long they'll last, and number two, how far that individual cycle will move. In the case of this rising cycle, if you measure from the last low, which was on the 27th of June, NDX traded at a low of 41.7974, so just under 41.80, and then it traded up to a high of, just have to double check this, 48.37. 48.37.67. So just under 48.38. So that's a pretty significant move higher in what I consider to be a reasonably short period of time. So what we're looking for then is where the next declining cycle starts to form, and we can do that by zeroing in on a shorter time period. But before I do that, I want to point out one technical pattern that's been occurring. So on the 23rd, we formed a bearish divergent bar. Now, most of you know by now that a bearish divergent bar is when the high of the bar is higher than the previous day's high, and the close of the bar is in the bottom half, the bottom 50% of the day's range. Now, what I find interesting is we formed a bearish divergent bar coming off of a line of resistance, long-term line of resistance, and that bar tried to make a new high, but the last highest all-time high is 48.37.67, came up just a little bit short at 48.36.45. So it didn't quite take out the all-time high, stalled at resistance, and formed a bearish divergent bar. The way you should interpret that is the market had enough energy to move higher than the previous day, but did not have enough energy to sustain a new higher price. The following day, the following trading day on the 24th, we established a bar, a daily bar, that showed a lower low and a lower high. Those are usually the first clues that you might be starting to see some sort of movement lower. On the 25th, we also had a lower low and a lower high. On the 26th, we had a lower low, but a higher high, but another bearish divergent bar. So we had a bearish divergent, 3 days of lower lows, and a second bearish divergent. And then that brings us to today's trading activity. So far within today's trading day, what we have seen form is an inside day. Now, an inside day is when the trading range of today's bar has a high that's lower than the previous high and a low that is higher than the previous low. So you can see that the range of today's trading is actually smaller than the previous day. That was on Friday. An inside trading day, an inside bar, is generally an indication, and you know, folks, technical indicators are just that, an indication, not a guarantee, not a commitment that any one specific thing is going to happen, but an indication based on historical patterns. That's an indication that there is a period of consolidation going on. There's a pause in the current trend, and the current trend is actually declining. And I'm going to go to a 10-day, 10-minute chart now to emphasize that. So my view, my personal view, is that the current trend is declining. And the way I'm going to confirm that is I'm going to come off of the last highest high, which is back here, and I'm going to connect to the high over here on the 26th. And then I'm going to connect to this series of lows. So you have a low here where the market moved down to that low. So it's a natural level of support, moved higher off of that, had another natural level of support here where the market moved strongly downward and then bounced up, and then have another natural level of support here. So what that's telling me is that at the present, we're in a declining cycle. So we have two bearish divergent bars in the last 5 days, and we have a set of lower lows and lower highs, and we have today, at least as of right now, with still 4.5 hours to go in the market day, we have an inside day, which by interpretation is generally an indication of consolidation, a period of pause before the market or the index continues to move in the direction of the trend. So could we move higher on NDX? Absolutely, but now we have, and I drew this very quickly here, I probably need to modify this and make this a little, make this resistance just a little bit higher. Let me do that just so we have an idea of where that could go. I'm going to come right off of that high, that last highest high, and I'm going to connect with that next high here, and then I'm just going to do a quick adjustment to my lows here, so I'm capturing that natural level of support and this natural level of support. The reason these are natural levels of support and this is a natural level of resistance is because the market defined them as such. The market moved higher, stalled that price, and then moved lower, making that a natural level of resistance. Market moved lower, stalled at that level, moved higher, making this a natural level of support, as well as this a natural level of support. So we're not trading at either support or resistance right now. Could we move higher up to this declining level of resistance? Absolutely we could. That could take us up to the 48.05 range. Of course, it would depend on when we would hit that. You know, if we did move up there and we hit it tomorrow, it might only be 4,800 range. Could we move lower within this range? Absolutely. And if we move back down to a level of support, that is consistent with where we were last week, and then on Friday, earlier in the week, and then on Friday, we could find ourselves trading down to a level of, say, the 47.48 range, 47.48. So here's the way I interpret NDX and what's going on. And I want to compare this next to SPX and RUT and just see whether or not there's consistency in the major indexes. It appears that we have the first indications of the formation of a declining cycle. We have a high that was a bearish divergence. It was a high that was not able to beat out the all-time high previously, a few days earlier. We have another bearish divergent bar after a series of lower lows and lower highs. And today we have an inside bar, which is by definition usually an indication of consolidation, a kind of a time to stop and take a breather before continuing a move in the direction of the trend. And the short-term trend right now is declining. And there are other things you can take a look at on the 1-year daily. If we layer in the studies and we look at the AO, for example, which is an indication of momentum, you can see that momentum has been declining pretty consistently since the 12th of August. So momentum has been weakening, which is always the first indication of declining price. So that's what I'm starting to see. And on a big picture view, if we take that back off again, on a big picture view on the daily charts, you can start to see that the lows that we're establishing now are lower than lows in the previous rising pattern. So it looks like there is a potential that NDX may have turned over and is starting to trend lower, but it could just in fact have been a short-term pause and it may turn and head higher, knowing that our validated long-term resistance is somewhere around the 48.39, 48.40 range. So what I'm going to be doing is keeping a close eye on this declining pattern that we identified on our 10-minute chart, because it's going to be pretty easy to see as I monitor that whether we move up to and break above this declining resistance. That would be an indication that perhaps this was a very short-lived declining cycle, and in fact what we really want to do is move back up to long-term resistance. If we were to do that on this 10-day, 10-minute chart, we would be pressing pretty hard into the upper 2 and 3 standard deviation Bollinger Bands, which all by themselves will act as some level of resistance. So we're just going to have to wait and see what happens here. Now let's compare that to SPX and see if it's a similar pattern or if it's dramatically different. Now in SPX, we had been tracking last week pretty long-term, actually for the last couple of weeks, a very long-term level of resistance, where on the daily bar chart you can see that we moved up towards that area of resistance and stalled out, dipped a little bit, and then bounced higher right up to that area of resistance, hitting a new all-time high on SPX of 2193.81. 2193.42. We came up just shy of that all-time high on the 23rd of August. And then since then, you can see here that we've had lower low and lower high, lower low and lower high. Another, I mean, this is almost identical to NDX, where we had a second bearish divergent bar. So this bar on the 23rd that tried to take out the all-time high that was formed on the 15th. That was a bearish divergent bar. 2 days of declining lower lows and lower highs, another bearish divergent bar, and today we are seeing an inside day. So it'll be interesting to see whether or not that inside day plays out. Let's go to our 10-day, 10-minute chart. I'm going to put a channel on here. I'm going to come off of the last all-time high, sorry, the last high in the sequence, which came up short of being an all-time high. And I'm going to come across this natural level of resistance that was formed by the market. And then we're going to come down to the last natural level of support. So just a little bit different pattern than NDX. We don't have two natural levels of support confirming our support. We only have one. And we seem to be climbing a little bit higher here. The level of resistance that we've identified coming across this high and this natural level of resistance is going to be right around the 2184, just under the 2185 range. So we're getting pretty close to that. And again, it's going to be pretty obvious to see whether or not we break above that resistance, or whether that acts as a major resistance point and turns and heads the price lower. Now, one other thing in favor of that being a strong level of resistance is that the 2 standard deviation Bollinger Band is sitting right at that level of resistance. Doesn't mean that we won't go higher, doesn't mean it won't push and flare the Bollinger Bands out like it did back here, like it did here. We're going to have to wait and see what indication the chart provides to us, and whether or not the price stalls out there. But right now, based on the big picture view of a daily chart, with today being an inside day, and that could change before the end of the day, but with it being an inside day, the interpretation is we've got the first indications of a declining cycle. The inside day is some level of consolidation that may or may not hold. We'll have to wait until the end of the day to see. Let me put the other studies on here real quick and just confirm. See, on SPX, we also have a declining Twin Peaks pattern. This declining momentum started as of the 21st of July. So we've been in a declining momentum pattern since the 21st of July. During that same period of time, we've been pretty much trading in a flat range, almost perfectly sideways, a little bit cycling up, a little bit cycling down. So what I would be looking for on SPX is a validation that in fact we are breaking below the lowest low in this sideways pattern, which would be a break below the 2147 range. If we broke below 2147, that's going to be a indication that in fact we are most likely starting to cycle lower. And it makes a lot of sense to me, folks, that we would cycle lower, because SPX cycles higher, cycles lower. We've been in a pretty strong cycle higher here, flattened out. It would make perfect sense to me, just based on historical patterns, that we would see some indication of a declining cycle here. And if we stayed in this pattern, inside the cycle as it's been identified so far, you can see where that cycle could take us. Maybe out to October 1st, in that range, we could see SPX trading down to the 2106 range. I'm not predicting that. I'm just right now tracking the cycles to see whether or not there's any validation in this pattern that we may be shifting more towards an overall declining bias than we are a rising bias. And before I get into RUT, one of the reasons that's important to me is because in my own personal trading, I haven't opened any new positions, much to speak of in the last several days, because I've got some positions that are biased to the downside, and that that indication of which direction the market may be moving is going to help me understand when I may want to take action on those downward bias positions, if I feel like I'm running out of time on them because options expire at a certain time, or if I feel like I need to take management action to cost average or cover the risk or whatever. But I've just kind of taken a wait and see approach in the last several trading days, just because of this stalling pattern that we've seen on both NDX and SPX, and really waiting to see the first indications of the formation of a declining cycle. RUT, very clearly you can see that we've been in a rising cycle since the last low on the 11th of February. The 11th of February was the last natural level of support before RUT just took off and has been trading in this rising pattern. Now, within that rising pattern, we've had cycles higher from support to resistance and cycles lower from resistance back down to support. The last downward cycle ended on the 27th of June, just like the other two indexes. The new rising cycle that we are currently in started on the 28th of June, just like the other two indexes. And RUT, similar to the other two indexes, appears to have stalled out at an area of resistance. So let's go to our 10-day, 10-minute chart and see if we can't put a cycle on here. Coming off that last highest high, coming across that high and that natural level of support here. Once again, we have a pattern that is showing a slight bias to the downside with the price currently moving higher. See, a price movement to the upside doesn't cause me any concern because I know where there's resistance, where the Bollinger Bands are, and if we break above that, I know where the next level of resistance and the 3 standard deviation Bollinger Band is. And it's not really about me wanting to trade at a certain level. It's right now for me wanting to identify whether or not it looks more likely that we are in a declining pattern because of some of the positions I currently hold and where that declining pattern could take us. Again, you can project out maybe to October 1st if we were to stay in this very shallow declining pattern, which could take us down around the 1219 range. Obviously, RUT, like the other indexes, could have a more dramatic move like it did back here on the 24th, where it moved from a high on the 24th of 1162 down to a low on the 27th of 1085. So that was a pretty significant move. Could we see a move like that again? Sure, anything's possible. I don't get caught up in trying to predict those types of moves. What I do is I remain alert to where my resistance points are, which right now the closest resistance we have is this long-term resistance, as well as the short-term declining cycle resistance, and where my support is. And the support that I have on the short-term declining cycle is around 1227. And obviously, if we went all the way down to support of the rising cycle, that depending on where we would hit that, could be around 1157. So we've got quite a range of movement. Obviously, there's a much broader pattern here too that would take us back down to the same levels, same support levels that we were trading at in mid-February, and that could take us down to the 975 range. So I don't know where it's going to go, but what I want to do now is go back to the AbleTrend long-term charts. Michael, if you want to take screen control for me and put up your NDX longer-term timeframes, that would be helpful. But what I want to do now, folks, is after I've done this evaluation, and those of you who follow along with these commentaries when I do them know that I like to start with a big picture view on the bar charts and then go to AbleTrend and see what the longer term timeframes are telling me, and then work all the way down to the shorter term timeframes, because it's the short term timeframes, the 3-9 and the 5-15 timeframes that are going to give me the signals I'm going to trade off of. But in the back of my mind, I always want to know what that macro view is. Does it look like we're starting to shift lower? That may influence the type of strategy that I want to use on a downward bias or an upward bias position. It may influence how far in or out of the money I want to be on a position. And it may, for me, influence how quickly I may want to cover a position if it looks like if I opened a long call or a long put and it looks like the index is moving against me, how quickly I may want to cover that position. So this is really about having a big picture view, kind of knowing where I am not flying blind and just taking each of the trade signals um, at face value and always using exactly the same strategy. I think that that's not a wise trading method. You got to have some sort of information about where the current trading signal, short-term trading signal, fits into the big picture, and then what strategy do you want to trade in order to minimize your risk and yet still take advantage of the opportunity. All right, so on your 120 daily, just kind of walk me through what you're seeing on the 120 daily, Michael.
Well, on the 120 daily, we have support that is printing around the 47.74 range. That's the daily support. And then we have 2-hour resistance around the 47.96 range. So we're basically stuck in between support and resistance, basically, on the 120 chart, for sure.
And just for the benefit of people listening, Michael, when you see a pattern like that where support is the longer time period and resistance is the shorter time period, do you have any interpretation as to whether or not that indicates more upside bias or weakness or strength?
I don't personally, and I just think we're just stuck in between support and
Okay.
resistance, and it'll break out either way. But
Mhm.
I don't. Both of them are the same strength to me.
So what I find interesting is, since the big picture, my macro view is that we're trading now just starting to slide off of a long-term resistance. It's actually good to see that we have resistance printing at the 120-minute level, which may create some validation, but it's not significant enough yet, it appears, to have caused the daily support to stop printing.
Right.
So there's enough in that algorithm, that enough activity that AbleTrend captures to say there's still some level of support at the daily level.
Yes.
How about the 60, 180?
Well, well, the 6180 to me, if I just glanced at it and didn't look at the other chart, I would think we'd probably going to go lower
Mhm.
because there's no support at all below us, none whatsoever. The only thing we have is resistance, which we're actually trading right at that now, 47.92 and a half. We're trading at 47.98, but that's still within range. It's still touching the bar, so I don't.
Sure.
I just yeah. So I see lower personally on this chart here for sure.
Okay. And then what about the 30, 90?
And the 3090, of course, the 30-minute has stopped printing as of this morning around 10:30. So it hadn't started back printing yet, but it's a little weak because the bars are not really there's no direction, but there's no support either. So it's just still resistance level. It's there. So I
So
still
we've,
I still see weakness myself personally.
yeah, so we've got green bars, we've got no support and no resistance.
Mm-hmm.
So just based on the amount of time that I've worked with AbleTrend, and you've worked with it longer than I have, Michael, but the amount of time I've worked with AbleTrend over the last couple of years and kind of layering an understanding of AbleTrend into the bar charts, that's actually fairly consistent with an inside bar on a bar chart, because it's a period of consolidation where right now at this moment there's not a lot of commitment one way or the other. You
Mm-hmm.
don't have strength of support, you don't have strength of resistance, and all the bars are green. So
Yes.
that there is some consistency there.
Yes, most
And then it
definitely.
takes you right down to your 3-9 minute, which we use as a primary trigger for new trades on indexes.
Yes. Of course, as you were doing the commentary, of course, the market you was talking about, the market was rising, and it did. There's a buy
Mhm.
signal for sure that came in right around 11:30, and then it climbed from 47.91 all the way up to 48.01. And so we're basing right now. It's like it's trying to pull back, but we're still have double confirmation to the upside. So it continue to go higher for all I know. We could be at 48.50 for all I know. But if
So
you look at the longer time frame, you sort of go, yeah, I'm not sure if that's going to happen or not.
yeah, so the summary of this, the takeaway is bar charts are showing that we've started to drift lower off of long-term resistance and off of a new all-time high. The longer-term time frames on AbleTrend are showing either no commitment or commitment or some weakness. No commitment or some weakness. And the short-term time frame, although it says go long, buy to the upside, there's nothing wrong with taking that signal of buying to the upside. But seeing everything that I'm seeing, I would be trading that a little differently. And the way I would personally trade that, Michael, I know you like to go deep in the money when you're buying a long call or buying a long put. The way I would personally, for the benefit of the people in the room, trade based on the signals I see is I'd be buying a call out of the money, because what I'd be looking for is then if I needed to cover that trade, and by cover I mean sell to open a call against it to create a spread and reduce our risk, what I would want to do is to create an out of the money credit spread, where if the index moves against my position, it doesn't move up and instead it moves lower, I'd want to turn that into a very simple credit spread where if the index does and continue to show weakness and drift lower, it ends up being a profitable trade for me anyway. Not the type of profit I wanted from the get-go, but ends up being a trade that could still work out for me.
Yes.
How about SPX? Same thing.
Now, I like this SPX chart. Of course, this is before all these buy signals came on, so we'll have to regroup on that one. But like I said, this morning, of course, well, let's just go back to the daily chart here. The 120 daily, we're right up against resistance. It's been tracking since the 24th of August when we had a sell signal there. So that looks really weak to me. I mean, that's obvious. It looks weak. I mean, it's where all bars are red and you got resistance
and no support printing.
No support. But then until about an hour ago, we had double confirmation on the 6180. We had 180 resistance and 60 resistance, but that's changed, and now we've got a buy signal to the upside. So we'll see how that works out. I mean, technically, it's really not a valid buy signal yet because we're not sure if resistance is going to print again on the 60 minute or not. I'm sorry. I apologize. The 180 minute. We'll have to wait. We'll have to wait a while for that.
But that right there is a great example of what I was saying. By having a macro view of what's going on, it may cause you to be much more conservative on taking a buy signal like that, because we're trading at or near all-time highs. We're trading just off of resistance. We had 3 days of lower lows and lower highs, 2 days of bearish divergent bars, an inside day today. I'm not opposed to taking a buy signal, but I'd be waiting for a complete validation confirmation that that's a good valid signal.
Yes, agreed.
And it looks like the 3090 is pretty consistent there.
Same way.
Yeah.
Same exact way. Yeah, and then the 3 minute, 9 minute chart, it's doesn't have double confirmation, but it's got 3 minute, it's stair stepping higher, but I'm just suspect of it all, to be honest, because I just think I see what's coming. But
okay, how about RUT?
Okay, let me refresh that. Excuse me. Let's go back over here. So it looks like the NDX basically. You've got support and resistance both. It's printing. You got daily support, and then you've got 2-hour resistance on the 2-hour daily chart. So then if you take the 60 minute 180, it's been printing support and resistance for a good little while now on that chart. It's actually right on top of each other. So that tells me it really don't know which way it wants to go. It really don't. Even though we got a buy signal this morning, but what makes me pause is when I see that buy signal on the 60 and I jump right to the 30 minute, 90 minute chart. We're up against resistance at 1247.
Yes.
So that would say, well, we need to think about that, because you're going to get your smaller time frames going to show their hand first, and then it'll follow around to the others. But so yeah, there's definitely some resistance there at 1247, and I was looking at that when you were showing your bar chart a while ago and looked at that, so I can see that channel, what you're talking about for sure. And then of course it's between support and resistance, but the support level is the 90-minute. I like that. So,
Yes.
and then the 3-minute, 9-minute chart. It's the same way. It's basically got a sell signal, but you've got support at 1245. So can it go through that? Yes, it probably can and will, but we'll just have to be patient and see where it goes from here. But it's between support and resistance.
So,
Trapped.
so when we look at all that and we look back over, I'm going to say in general, a 2 to 3 week period where things have been running pretty flat. When you look at a bar chart, it's so easy to see how flat things were, especially on SPX. And what oftentimes happens with traders, and I'm going to include myself in this, is you get um, gradually, hour by hour, if you're an active trader and you're paying attention to the markets each day, sucked into seeing an entirely different pattern with more narrow ranges. But because you have a desire to be an active trader, you start talking yourself into signals that maybe are not valid because it's the best one you've seen for a while. And that it may be a time where it's good for you to just kind of step away from trading here for a day or even a couple of days, because you don't want to take the best of what you see. You want to take the best signals. And then it's kind of a snowball effect, Michael. What then ends up happening is if you take the best of what you see and it doesn't work out, you start telling yourself a story, which is a false story. Well, the signals don't work because I took that signal and it didn't work out. I had to cover the trade and now I'm discouraged. There are so many cycles like that within a trader's psychology and within their thought process. It's very important, in my opinion, that you take a big picture view, which is why I start each of my evaluations with that macro view of the bar chart. I just kind of want to see where we've been. And now I'm going to dig a little deeper all the way down to the 3-9 minute. If all I did was I look at the 3-9 minute and I take a buy signal to go long and it doesn't work out, I might get a little discouraged. Well, can I trust the signals that I see because the last 2 trades I took didn't work out? When you have that macro view, kind of skipping across all of the different intermediate time periods, that macro view, you now go, I get it now because, geez, I took a buy signal. It's a valid signal, but I took a buy signal pressing right up against a long-term resistance. There's nothing wrong with taking that buy signal, but the knowledge of that macro view should influence the way you take that trade. And what I just described a moment ago is I'm going to be very alert to a need to cover if I take that trade. And I'm also going to place my trade in such a way that if I need to cover, it creates a position that has a contrary directional bias. So if I bought a long call, I want to be able to convert that position into a spread that has a downward bias. Because if I'm not able to day trade my long call and get out of it for a nice profit, I know that the market is starting to weight more heavily to the downside. So I want to position myself so that I can take advantage of that. And if I instead go deep in the money by buying a call, I've tied my hands a little bit, restricted what I can or can't do with that. The reverse of that is true also. If I saw a signal to go short, because we're trading up against my macro view of resistance, I'm going to buy most likely I'm going to buy an in the money put, because if the market reverses on me, then I can sell to open a put against it and create an in the money long vertical spread, which is exactly what I want. I want a long vertical spread to be in the money. So that's just kind of a overall view of where I'm going to place my strikes, why I'm going to choose the strategy I'm going to choose, and how I'm going to be influenced by that macro view, although I'm not going to be bashful about taking signals when I want to open a trade. You don't want to start second guessing your signals if they've proven reliable for you in the past. You want to maybe evaluate your position.
Mm.
What do you think, Michael?
Well, you actually just drew out perfectly what happened to me this morning. So, and I have to share it with everyone because you're exactly right. You know, I took this signal on the 3 minute chart right here, and it's risky. I knew it was risky, 100%. But I looked at the longer time frames. I said, okay, we got some resistance here, so I took the trade, and
Yes.
it didn't work. I got stopped out. Well, this next signal came on right when we started the view, and I didn't take the signal because of the longer time frame. But look what happened. It went all. I mean, I would have made about 7 points on the NDX. So that's, you look at the longer time frames, it keeps you out of a trade. But if you trade the short time frames, you got to stick with what you know and just go with it. And like you said, go out of the money. If it didn't work out, make a credit spread out of that, a call credit spread. There's so many different things you could do with that. But that's interesting. You just drew my morning when that last couple of statements.
Well, Michael, I'm glad you shared that because that is the reality of trading.
Yes.
I have not been paying 100% attention to trading for the last several trading days. And so I'm not looking at every one of the signals. I know you are because you're the primary host of our live trading room and you're following along with every one of these signals. But the reality is, you're going to make those decisions. It's easy to come in after the fact and say, well,
Yeah.
I see the big picture view, right? That's the hindsight trading app we want to develop. I see the big picture view, so I wouldn't take those. I'm not saying that. I think you did the right thing by taking the trades. You also did the right thing by taking yourself out of the trade because it started to reverse on you. That was the decision you made. Where I want
Yes.
to lead people's thinking is use some of this information and this view of the charts to influence the strategy that you want to use to take advantage of the signal, as well as the placement of your strikes, so that you have the ability, you have an out, you have the ability to convert a long call or long put to a spread that is properly positioned to take advantage of whichever direction the market has now shifted to. That's what I'm saying.
Yes.
And immerse yourself in your charts. Either trust your signals or I say stop trading, because there's nothing wrong with the signals. When Michael's saying he took a signal to go short, there's nothing wrong with that signal. It doesn't mean that the trade is always going to work out. So that's kind of where I am on this. And let me just add one other comment for those of you who have been through our Profit Accelerator program, where we talked about seed iron condors, or you've been through our Profit Maker program, where we did even a deeper dive on seed iron condors. If you're buying time on positions, there's nothing wrong with that. If you're waiting for the market to show you more clarity of which direction it wants to move, and you've got some troubled positions out there, a seed iron condor is an excellent approach to being able to just shift the liability you have on that position out further in time. You can shift it out a month. Well, you could shift it out as little as 1 week, but you could shift it out a month. You could shift it out 3 months. Somewhere in the period of time that you shift that liability out, you're going to start to get a greater sense of clarity. So don't treat your trading and a problem position as though you're about ready to run into a brick wall. You want to build a garage door in that brick wall and drive through it. And you want to just move your liability further out in time. That means use the seed iron condor strategy to resolve whatever near-term liability you have. And near-term could be a matter of a few days or a couple of weeks, and shift it further out in time. Right now, as I look at the bar charts and I look at these long-term Able Trend charts, there's just no commitment. There is really no strong commitment one way or the other on these indexes. And so you got to be patient, folks. This is, at some point when we get back into much more significant volatility in the markets, we'll look back on this period of time and go, well, what? That was only 4 weeks, or that was only 3 weeks. Well, when you're living it hour by hour every day for 3 weeks, it feels like it's tedious, it's exhausting. why aren't the signals working? You start to actually create a false story for yourself as a trader about the integrity of your strategies, the integrity of your signals. Where if you fast forward 6 months from now, when volatility will probably be much more significant than it is today, you could look back and go, well, it was only 3 weeks. It wasn't a big deal. It's a lot easier to own the 3 weeks after the fact than it is to live it hour by hour every single day, like many of you do. But there's nothing wrong with watching your signals every day, moment by moment, hour by hour. Just have a healthy respect for the fact that, in my personal opinion, and you can form your own, but in my personal opinion, the markets are really trying to decide which way they want to go. There's no strength of commitment one way or the other. It looks to me like we're starting to drift lower in a cycle, but there certainly has been no real strong sell-off. So, Michael, any other thoughts or comments?
No, I'm good, Mark. Good. Thank you.
Okay, well, I sincerely appreciate everybody being here, and
Oh, Mark,
yeah,
I know something. I know something, and I'm sorry, and I apologize. But you were talking about something a bit ago on your 120. I mean, not 120, but on your daily chart that where it tried to make twice to break through the channel and come
yes,
back. So I think that's very, very significant, especially with some of the indicators that I watch, and it's actually hit it twice. So that's why I think that possibly that we will, if it doesn't break the high of 48.36, which was last Tuesday, I think you'll start to see a move down. I really do. So, but that's significant for it to hit it twice in that shorter time period and still bounce off of it. So
I
we had
agree
a
with
great
that.
we had a great move down Friday. I mean, it got pretty low on Friday. I can't remember the low it was, but it nice sell off on Friday. So
Yeah,
we'll
I
see.
think it's significant, Michael. I also think it's significant that it it tried to break through twice, and one of those attempts was a new all-time high
Yes,
on NDX and SPX, not so on RUT.
yes, sir.
And we came up just pennies shy of breaking above that again. So,
Yeah, we did. Yeah,
yeah, just pennies. I
yeah.
mean,
Yes,
it
right.
was about
It
as
was right.
close as it could be. So,
Yes, sir. Okay.
all right. Well, I appreciate the emphasis on that. So, again, I do appreciate everybody being here in the room, following along with our commentary and our trades. Um, have a great rest of your trading day, and we'll continue to monitor this just to get a sense for where we may be going with this.